Hello, everyone. Thank you for joining us. We are just waiting patiently. We are kind of watching everyone kind of join in. The attendees are coming in right now, so give us a few moments, and then we'll go ahead and start this. So right now, if you can just wait patiently, we'll be right with everybody. But welcome. Thank you for joining us. All right, it looks good. A few more minutes. We just had an additional 10 people just join us in the last few seconds. So we'll give everyone else a few moments to continue to join us, and we'll get started very shortly. Okay, well, let's see here. We'll go, I'll tell you what, I'll let everyone else still kind of join in here at the last minute. I can see the attendee count still kind of rising here, but let me just take a quick moment just to thank you all for joining us. This is American Heritage Lending's webinar series, and today we're going to be going over working both sides of the purchase contract. And it looks like we've got quite a few of us in here. So let me go ahead and just introduce myself and give us a couple housekeeping items if you don't mind. So we have greetings and welcome to Originate More, American Heritage Lending's webinar series. And today is our 7th webinar. And our topic of discussion, as I mentioned, is working both sides of the purchase contract. My name is Tony Gast, and I am the marketing manager here at AHL, and I'm honored to be the moderator today. I'd certainly like to introduce Jamie Gilso, our EVP of Third-Party Originations, and Jackie Weed, our EVP of Operations TPO Division. Both Jackie and Jamie join us with a wealth of knowledge and experience, and today they'll be sharing that invaluable insights with you. So before we get started, let's take care of just a couple housekeeping items to ensure an enjoyable experience for everybody. Feel free to actively participate throughout the entire webinar. You can submit your questions in the chat box, and our expert speakers will address as many questions as possible throughout the presentation. Please be aware we have certainly dedicated time at the end of this presentation to address any remaining questions to ensure all of your questions are answered. And also note that this webinar is going to be recorded, and the link will be sent to your email address at the conclusion of the session. Just one thing to note is sometimes it takes a few moments for that video to kind of generate. So it's normally, I would say, within 30 minutes upon the conclusion that you'll receive that email. We will also be posting that video on our website along with the PDF of the file that we'll be sharing with you. So both of those will be available, and we'll let you know as well. So now, without any further delay, let's get started. So Jamie, over to you.
Well, thanks, Tony. And thanks again for everybody joining us today. Good afternoon or good morning, based on where you may be. As Tony mentioned, this is part of our Originate More webinar series, where we try to give all of our partners just different tips or tricks that we've learned along the way on how to do just that, originate more business and help grow your pipelines. So again, today we'll touch on working both sides of the purchase contract. Many people don't realize there's a lot of hidden gold, per se, in every purchase contract. So again, my name is Jamie Gilso. I'm as always, joined with Jackie Weed, who oversees all of ops and credit here. So if you have scenarios, there'll be plenty of time to bring them to the table and potentially get approved. Quick agenda, we'll just touch on who we are here at American Heritage Lending and what we do and why you may want to partner with us. After that, we will jump into the segment, we'll go over some facts and figures on why this is a really good opportunity, give you some ideas on how to originate some more loans, and as Tony mentioned, we'll have plenty of time for Q&A. So real quickly, American Heritage Lending was founded in 2008. We are located with a corporate office, in Irvine, California. However, operations teams are located throughout the US to ensure good service and all time zones are covered. Our management team is made up of longtime non-QM veterans, folks that have a lot of experience in non-agency lending. So this is stuff we're very used to and very comfortable with. We are a lender that you can trust and a very good partner. Again, seasoned staff in non-QM lending. A lot of common sense underwriting done every month. We didn't just start doing non-QM 14 months ago, doing it for decades. Flexible underwriting when it makes sense. And we've got great account executives who can help you structure your loans if you're not familiar with this type of business or if you have some out-of-the-box scenarios. Just real quickly, some of the things we do. Again, we are a full-service nationwide non-QM lender with a full suite of non-QM products. Bank statement loans with ratios as low as 20%, DSCRs up to 85, a really great and unique primary residence bridge loan, underwrite our own condos in-house, and foreign nationals up to 75 LTV. You can, of course, reach out to your account executives. They'll be glad to give you more information. Covered in 48 out of 50 states, as you can see on this map. This is available as well on our webpage, ahlendtpo.com. Why you may want to partner with us, as you saw, and we can explain further if wanted. We have a full suite of non-QM products, including some true niche products that most don't have. Again, we use common sense underwriting. Jackie and her team have been in this business long enough to understand a good loan when they see one. As a result, roughly 38 to 42% of our business each month has some kind of exception to our guidelines. We've got one of the better portals in non-QM where you can upload your entire file and you have full access to your pipeline at all times. Offering delivery across all channels, wholesale, non-delegated correspondent, as well as delegated correspondent. We also have some table funding options for those of you that may be interested. We feel we have best-in-class turn times for non-QM. Many of our loans come in and out of the system in less than 20 days each month. So let's talk about the potential here today on some of the business you could find in purchase contracts. So real estate is a great market in general, and 2025 does not look any different. The NAR, the National Association of Realtors, anticipates around 4.5 million homes sold. And if you look on the right on some of the what I call the obligatory stats, prices are up. Most people on this call work off some kind of commission based on loan size. So that's a good sign for most. A lot of homes will be sold at higher prices in 2025. Just real quickly, you can see some of the hotter markets throughout the US. Some of those are always on there. Some are a little different. I personally, I didn't realize Buffalo was a hot market. I say that jokingly because I'm in Rhode Island, which I didn't realize was a hot market either. So, but there's always business, as we say here, there's always a loan. So why work both sides of the contract? Why does this matter? We just heard about 4.5 million houses being sold. Well, as you can see by these stats, by and large, the majority of every real estate transaction in the United States involves at least one, most oftentimes two real estate agents. So regardless if it was a multi, a single family, a condo, owner occupied, second home, etc., almost all of them involve realtors, often two realtors. Again, there'll be 4.5 million homes sold roughly in 2025. The majority of those transactions will have some kind of attorney involved. As a matter of fact, in some states, attorneys are required. Depending on where you are in the country, we have what we call wet and dry states when it comes to funding, particularly mortgage closings. But in the wet states, often there are attorneys required to be present. So again, 4.5 million homes sold, the majority involve realtors and attorneys on both sides of the contract, buyers and sellers. We've included this for you, and again, Tony mentioned you'll get a copy of this webinar, but just for your own file cabinet, if you will, just a little reference guide on the estates that do require attorneys. Okay, so now we've figured out there'll be a lot of action next year, or pardon me, this year with real estate contracts. Again, each transaction has a lot of players involved. All of those folks listed could potentially give you more loans in the future. All those folks listed are potentially great referral sources. So I guess I would just ask, the group, and we do this a lot, honestly, different partners we deal with, how many purchase loans have you funded in the last 12 months? And how many of those had multiple contact information for both realtors and attorneys? And how many of those folks have you not spoken to yet? So if the average purchase contract had two realtors and two attorneys, did you speak to all four of those parties on every one of your purchase deals in the last 12 months? If you did, awesome. You probably grabbed extra business. If you didn't, you may want to think about that for a second. So, here's just a generic purchase and sale contract. Well, it has everything you need right here to go make quantified sales calls if you want to, right? So first you've got the buyer's attorney. So now the buyer is your client, generally speaking, right? You're the loan officer. You've got somebody purchasing a house, and you're lucky enough to help them achieve the American dream. Well, they probably have an attorney involved. You may or may not know the attorney, but if you don't, you're probably going to speak to them anyways. They might want updates, they might not, but you should probably get to know them not just for that transaction, but clearly they're involved in the same business as you, right? They're involved in the business of closing loans, which we all have a vested interest in doing. So there's a great lead right there out of the gate if you haven't spoken to them yet. The other thing you have here, though, is you have the seller's agent. So I'm going to give you a quick story. I'll digress a bit. I was working with a loan officer out of Massachusetts years ago. He was a great guy, great producer, true professional. He wanted to grow his business. He was all self-originated. He'd gotten past 50 million a year, and he was trying to get to 100. And you run out of time in the day, as you all know, for anybody busy in sales. So how do you find time to do more business and use it most efficiently that you can? So he started doing a pipeline review every morning every Tuesday morning with his processor to know where his loan stood. He would then call his borrower and give them an update. He then called the borrower's buying agent, who was probably, I say this jokingly and lovingly, was probably calling him anyway for updates, but gave them a full update of where the loan was as much as he could. After a while, though, what he started doing was really unique. He started calling the seller's agent. So if you think of the seller's agent from their perspective, just like everybody else involved in this contract, they don't get paid unless the deal funds, right? So the loan officer, the realtors, nobody gets paid unless the deal funds. But the seller's agent is kind of left in the dark in many cases, right? By law, they can't know much, right? They can't know the borrower's personal information. They can't know personal things about the file, but they're just kind of left hanging often. So he started calling the seller's agent and just saying what he could. Hey, deal's moving along nicely. Appraisal's been done. Value looks good. Anything he could say legally. And what he found was he just did it because he thought it would make sense. The seller's agents were just flattered that somebody called them and actually gave them an update. They felt like they were usually left in the dark. And so what happened? Well, as a result, he just made a bunch of new friends that were also realtors. And they don't just sell houses, they also have buyers as well. So it really opened up a whole new wave of business for him. The following year, he did in fact get over 100 million. I'm not sure it was because of all this. I'm pretty sure it wasn't. But it really did open up a lot of new contacts for him. So the seller's agent is a great lead, and it's on every contract. And of course, the same thing. You have the seller's attorney. So can't tell them much, and they may not even care, but you could let them know that, hey, this deal's moving along nicely. We're going to make the closing date, etc. If you get the chance to engage with these folks, again, they're in the same line of work as you. Okay, they're involved in real estate transactions. So there's a lot you can say to them besides this particular loan. What other type of real estate transactions are you involved in? Maybe you as a loan officer are really good at foreign national lending. So do these folks, are they involved with immigration? How about divorce situations? There's a lot of unique solutions that we have, for example, where people can get into a new house with less than 6 months of alimony support payments. So again, these are real estate professionals in the same business as you that you can have great conversations with about originating new loans. And you already look like a professional because you're giving them an update. You're calling them. You're doing the right thing. So you can see right there in those examples on every purchase contract, and I would almost politely challenge the originators on this webinar today to go back on any purchase deals over the last 12 months. Just take a look at those contracts and just ask yourself, do you know all 4 parties involved? And did you speak with them? maybe there's some opportunities there. It is the spring season, right? Okay, so again, we've talked about there's 4.5 million roughly homes going to be sold this year. By far, the majority of them will have attorneys and realtors involved. The majority of those will have both sides represented. So there's up to 4 potential referral sources on every purchase contract. And once you reach out to those folks, you want to be able to stand out. So you already did. Kudos to you a little bit by just calling and giving them a professional update. But if you do engage in a conversation with them, what can you offer them that's different? Well, we've got some stuff here at American Heritage Lending that we can, give you to put in your toolbox, for lack of a better term. One is, if you're talking to realtors, we've got a great bridge loan solution. So this is a bridge loan for owner-occupied properties. Somebody wants to sell their current house and buy a new house. They need the equity in the current house to do so, and/or they can't afford both payments from a qualification perspective. As many of you know, nobody wants to take an offer with contingencies these days. So our bridge loan does allow the borrower to, on the departing residence, refi the first mortgage, take the cash out needed towards the down payment of the new house. It's a 12-month term, interest-only payments, and those payments are deferred. So there's no cash flow paying to the borrower while they sell that house. We offer it as a standalone solution. So if you can take the file, agency on the new purchase, you feel free to do so. However, if you need our help, we can do it as a simultaneous loan as well. We also close the new purchase. What's nice about this situation is if we do in fact do the new purchase, we don't count the prior payment in the debt ratio. So again, you're going through your purchase contracts, you're finding realtor information, you're going to call them. Now you've got them on the phone. What are you going to say? You're a true professional. You're going to take their calls on Saturdays. You're going to give their folks pre-approvals. But if you have something different, and this is different, realtors love a bridge loan because they're not readily available. So if you have something different to offer them, well, now there's a whole different conversation happening. Now that quick 30-second phone call might have turned into a 9-minute phone call, a follow-up meeting, a follow-up lunch. So there's one unique bullet you can throw out there. Another one is your ability to, perhaps finance unique properties or make exceptions. So I'll let Jackie speak to this one, but this is something where we made an exception on a condo. So again, based on what market you're in, if you're dealing with builders, home builders or developers, and you're trying to win over their business along with the realtor, having the flexibility to perhaps have condos underwritten up front or be the first in on something might help. So I'll just ask Jackie to opine on this particular deal.
Certainly. So this was a scenario in many states. We're seeing a lot of insurance challenges, and certainly with condominium developments where the HOAs are looking to cut the costs on insurance. And in doing so, they're getting a little bit creative on their coverage. This particular scenario was a non-warrantable condo, and the homeowner's insurance policy on the condo complex had an actual cash value on the roof. So typically what that is if the roof exceeds 12 years old, then any coverage on that roof it's depreciated. But it is something that we can look at, and assuming that the HOA has some reserves, perhaps a line item for the roof, we'll make those exceptions, where they make sense.
Yeah, thanks. A great example. Again, Jackie and her team just have, great experience in this stuff. Jackie, I saw you approved one recently where I think it was a doctor or dentist had recently bought out a practice only 3 or 4 months ago, and we were going to make it work somehow.
100%, sure. So it was a dentist that had worked at the practice and purchased the practice from a retiring dentist. Certainly, he wasn't the recipient of the income for the entire practice prior to that, but he did purchase it 3 months ago. We were able to get some financial information on the practice for the last 24 months. And, we went ahead and made it work for the dentist acquiring the practice.
Yeah, that's great. Common sense stuff, right? I mean, like I said, you had the financials from the seller, and yeah, good stuff. Yeah. So again, folks, I apologize for redundancy, but if you do want to reach out to those realtors and attorneys, and you want to have something different to offer, you have things like bridge loans, You have the ability to work with lenders like American Heritage Lending that does all kinds of common sense underwriting and loan approvals. We have something else that's unique that I apologize for not having up on the slide, something we call stacking, where we actually allow the realtor fee to be financed into the mortgage, and/or we allow the broker fee to be financed into the mortgage. So if you had a purchase for $500,000, 80 LTV, and it was a $400,000 loan amount, and you, the originator, wanted to make 2 points, what we're saying is we can increase the loan amount to 408 and finance your fee. So your borrower does not have to bring those funds to the table. Just as importantly, even though your 80 LTV went to 81.6, your pricing stays at 80 LTV. So stacking, it's very unique. It opens up a lot of doors. It saves a lot of loans. It gives you options to give to your borrowers that most of your competition does not have. Again, you're allowed to finance the broker fee and/or the realtor fee and/or lender discount. Next month's Originate More webinar will be based on stacking. So real quick summary today, we'll open any Q&A, but there's hidden gold in every purchase contract. There's a good chance there's leads sitting right now in your former files if you go back and look at them. There's great ways to connect with attorneys and agents that you know are involved in real estate because you see proof of it literally in the contract. And if you partner with somebody like American Heritage Lending, you have some niche products to offer those other professionals that they probably don't have now or have not seen or would like to hear more about. So we hope you can use some of these tools to open doors and do just that, originate more loans. So with that, Tony, any questions we need to cover or anything that the group would like to throw in there?
I don't have any questions as of yet. I was just going to touch upon, like you said, that's just like we touching on stacking, that yes, the next date that we have for the next webinar, we'll go into much more greater detail on that. It's tentatively set for April 16th, so we'll make sure we share that. But let me double check. So if anyone's got any questions, you are more than welcome to go to the question area and type in a question. If you have anything for Jamie or for Jackie, let us know. I don't have anything else in the queue to present to you, no.
Okay. Well, that being said, again, we appreciate your time. We hope you at least pulled one good nugget out of this to help you find some more business. You will get a recording of this. Please reach out to your account executive with any further questions, and we hope to see you next month where we do cover the stacking topic. Thanks again.
Thank you both. Thank you, everyone.
Bye-bye.